It's one of the most vibrant and busy markets. Every day, $6.6 trillion of foreign exchange changes hands globally, and over $500 billion or $640 billion is traded in Singapore. The city-state is already the largest FX center in Asia-Pacific and the third largest globally, behind New York and London. There is a strategic plan to develop Singapore into a global price discovery and liquidity center for Forex during the Asian time zone.
A large community of FX players are already based in Singapore. So we saw the opportunity to work very closely with them to anchor their pricing and matching engines in Singapore so that together we can build an FX ecosystem that can serve not just Singapore's needs, but also the needs of the region and in Asia-Pacific.
For this ecosystem to flourish, the e-trading infrastructure must first be in place.
It is an essential piece of the jigsaw that can put us on the next leg of growth in the FX market in Asia. Today, if you want to have an enjoyable experience with video streaming or gaming, you need strong internet connectivity, you need high bandwidth, and you need powerful devices. So it is similar in the case of FX trading, right? Where today's investors demand much better price execution quality, much tighter pricing spreads.
Being able to access prices and execute trades efficiently are key in Forex trading. This is a market that moves very fast, especially in times of crisis, and any delay in closing a transaction can mean a missed profit opportunity.
For institutional users that are trading in the hundreds of millions to billions per trade, for them to access a price in a center like London or New York, by the time they try to buy or sell, the price would have disappeared. Someone else might have hit the price. Parties a lot closer and local to the exchange where their computers are what we call co-located will have the advantage. So if you see a good price and you want to buy or sell, you will run into a difficulty where you might miss the price. So in this sense, proximity is key because proximity leads to speed.
Question is the infrastructure ready to cope with such fast speeds?
We have already heard from market participants who have experienced a difference in terms of execution quality from banks that have already set up their infrastructure. During the early days of COVID-19, when the markets were very volatile, I think anecdotally what we have heard also is that the markets during the FX markets during the Asian time zone appears to be more robust and have more stable execution quality arising from some of these infrastructure being in place.
To date, 9 institutions have committed to establish FX pricing and trading engines in Singapore. They include BNY Mellon, Deutsche Bank, Citi, and BNP Paribas.
We've seen not only volumes grow over the last 5 years, the last 10 years, probably more than people could imagine, but we've also seen the electronic execution part of those volumes increase as well. So that's well north of, it's approximately 75%, whereas financial crisis and before was more like 50%. There's still more clients that need to go electronic, but the infrastructure in place in Singapore on the electronic side is well placed to capture additional volumes.
BNY Mellon has made Singapore the hub for its Asia trading in G10 currencies. These are the 10 most traded currencies in the world and include the US dollar, the euro, the pound sterling, the Australian dollar, and the Japanese yen. With 9 institutions as liquidity providers, has Singapore reached critical mass?
They collectively command 60% of the global FX market share. if you are able to get the buy-in of players who are the movers and shakers globally, right, commanding 60% of the global FX market, then yes, that's a long way of saying that, yes, I believe we have reached critical mass. And this is just the liquidity providers that we are talking about.
MAS is looking to grow the FX trading ecosystem and bring in other players.
There are also electronic platforms that offer their services to match trades between different parties. And a few of these have also set up their engines in Singapore. And as a next phase of this build-out, I think we are looking at the buy side, or what we call the liquidity takers, including the regional banks, the funds, the brokers, and the trading firms, to also co-locate their infrastructure in Singapore alongside the liquidity providers.
Spark Systems is one such platform provider which has received financial support from the MAS. The fintech startup has since gone on to secure investments from global players like Goldman Sachs, Citi, and HSBC.